Dobar dan. That means good day. Talkcast PDX. Dobar dan. That means good day. It's Talkcast PDX on the web, talkcastpdx.com. It's Tuesday. It's always Tuesday for me. December 14th, 2021. Name of the show is The Bogdanich Perspective. I'm your host, Paul Bogdanich. Welcome. It's episode 39. I'm going to call it Sentiment, as in trading the sentiment, because that's going to be the name of the game in between now and the end of the year. Didn't have a show last week. Some technical problems down here at the studio. So we have a couple of things to run through, a couple of reports that came out. Not that they matter that much because we're trading on sentiment right now. But I was going to read a real short version of the Creed. Again, this is a short version, and the Creed is the important points about how I think the market trades right now. It goes like this. If we want to earn more than 2% on our savings, we are functionally compelled to participate in the stock market. Excessive government spending over the last 20 years means interest rates can't rise substantially above 2%, and this destroyed the bond market, which used to be our low-risk investment alternative to stocks. Artificially low interest rates also destroyed the former correlation that used to exist between stock prices and interest rates. This disconnects the value of a share of stock from any calculable underlying value, and the share of stock becomes worth whatever someone else is willing to pay. More buyers than sellers make stock prices go up, and more sellers than buyers make stock prices go down. The Federal Reserve has been supporting the stock market by acting as a buyer of last resort. This causes asset inflation and prevents the market from falling to some unreasonably low level, and we are therefore reliant on the Federal Reserve guarantee. And that's a short version. Longer version I read in a bunch of other episodes. You can find all the backup statements, logic, and numbers for all those conclusionary statements in episodes 1 through 9. They're available at Talkcast PDX audio only. The basic point is that the low interest rates for the prolonged period of time, and they can't go up because the federal debt's too high, basically. It would bankrupt the government with interest payments. Means that the bond market is destroyed, and it took, stocks used to trade. There used to be a limit on stock prices compared to bonds, because it used to be possible to take your money out of stock and put them in bonds and get 7-8%, right? And then you would wait for the stock price to drop if you thought it was too expensive. That doesn't happen anymore, so it effectively removed the ceiling on stock prices. The only thing that remains of the old system is it's still an auction market. So in an auction market, more buyers and sellers makes things go up, more sellers and buyers makes things go down. And that's just the way it works. And then you got the Fed in there playing in there too to stimulate the economy. The hard news that we missed, we had, like I said, I didn't have a show last week, so we have some reports. If you could please put up graph number 1. This happened on December 3rd, which was not last Friday, but was the Friday before that. And this is the jobs report for the month of November, released on December 3rd. Said that 210,000 jobs were created. Weekly work week was 34.8 hours, which was unchanged from October. And the average hourly pay was up 7 cents from $30.96 to $31.03. A very anemic report. The economists were thinking 570,000, 550,000, 590,000, somewhere in that range. And we came in at 210. It's just a bad report. There's no other way to say it. I listed the categories of people that were hiring, and the largest was couriers and messengers, in other words, delivering Christmas presents, I guess. Temporary help services, 23,700. And those are your two largest. That's not good. And then if those red numbers over there are the people that shed jobs, and I find this interesting. This is November, right? Okay. This report is for November. General merchandise stores lost 20,400 positions. Clothing and accessory stores lost 17,700 positions. Sporting, hobby, book, and music stores lost almost 9,000 positions. And this is going into Christmas. So everything's backwards. Couriers and messengers up. Big losses in physical retailers. If you can take that one down and put up number 2, please, Michael. So that was the employment report. Next, we have the inflation, producer price index and consumer price index. The PPI, the producer price index, was released this morning. CPI came out last Friday. The headline numbers on both were 0.8 for a month. The thing that made the news, like I said, the PPI just came out this morning. They're blaming it for the little bit the market's down this morning. I don't believe it personally, but I think it's something else, which we'll talk about later here. But the CPI out last Friday showed for a month 0.8%. And if you look at the 12-month total, from December last year to November this year, comes out to 6.8%. All right, for the year, and that's the highest rise in the consumer price index since the month of June 1982, and a very long time. You can see there's nothing really astonishing here, other than the price of gasoline is, well, if you buy gas, you know all about it. But I mean, 7.3% for a month on the producer price, 6.1% for consumers. And then fresh fruits and vegetables hasn't shown up in consumer prices yet, but producers are paying 11.5% more for fresh fruits and vegetables. Everything else, these numbers should be down around 0.2 or 0.3%. So, I mean, even your background stuff like cereals and bakery, beef and veal, all the rest of it are 4 times normal. So inflation is not good. Another news event, if you can please go for graph number 3. We don't know how this is going to turn out, but this is the island of Java in Indonesia, and the volcano is called Semeru. Before this picture was taken, it used to be 12,060 feet high. Nobody knows how high it is or isn't anymore. Haven't done the surveys on it. I haven't been able to get a number. You can take that down, by the way. Haven't been able to get a number for the tonnage of ash that hit the stratosphere. There's no weather in the stratosphere, so it turns to sulfur dioxide, and it reflects sunlight back into space, which cools the Earth. It may or may not be significant, but looks pretty good, from that picture that we saw. But those were your 3 main news events over the last 2 weeks in terms of financial news, hard news. Sentiment was the name of the show. Going to trade the sentiment. If you can please put up graph number 4. This is the S&P 500 from June 30th to December 13th. December 13th was yesterday, okay? You can see that we hit an all-time prior cyclical high, I'm going to call it, on September 3rd. Stock market dropped, hit a cyclical low on October 4th, 4,300 on that low and 4,537 on the prior high. Made its way back into the channel, those 2 gray lines there. And that's where the Fed is trying to keep the market through the end of the year on their quote-unquote pandemic stimulus, because it boosts economic activity, allows people to buy more, makes it so that courier and messenger services hire 26,800 people a month, things like that. And then it dropped out. They were, we were comfortably in that level. And then on the day after Thanksgiving, which is where it drops below the channel line there, that sharp drop, that's when they announced that Omicron variant, right? And it happened on the day after Thanksgiving, which is Black Friday. None of the professionals were in their office, or very few of them. And they thought it was overdone. So the following trading day was that Monday, and that's that move back up. And then the day after that was my show a couple weeks ago. And on that day after the show, Fed Chairman Powell came out and said inflation's a problem. They're going to have to, what did he say? Tighten further and taper faster. Tighten means rise interest rates. Taper means stop printing so much money. And whether he does it or not is another question, but he talked the market down. Market fell 2 days in a row, then it went back up, then it went down, and then it, hit 2 days were really strong, then up, down, up, down, up, down. Yesterday it was down a little bit, today it's down a little bit, but basically sentiment the move back up was when they figured out that Alec Baldwin has killed more people than Omicron, that kind of a thing. But if you look at these days, November 26th, the market was down 2.3%. November 29th, following Monday, it was up 1.3. November 30th, down 1.9. December 1st, down 1.2%. December 2nd, up 1.4%. December 3rd, Friday before last, down 0.9%. And then you get into the week just past. On Monday, up 1.2%. On Tuesday, up 2.1%. On Wednesday, up 0.3%. On Thursday, down 0.7%. And on Friday, up a full percent. And it closed last Friday at a new all-time high of 47.12. So it made a new all-time high last Friday, down the first 2 days of this week. And yesterday, it fell 0.9%. You can take that graph down. But the point is, the average for whatever that is over 2 full weeks, because it includes both the Mondays, so it's 10, 12 trading days, 13 trading days, the average move in the S&P is 1.25% a day, either up or down, average. And that's unusual. It's kind of like these inflation numbers. They should be going up or down a fraction of a percent, barring some kind of earth-shattering news, but they're not doing that. They're moving in percents. And it's totally sentiment-based. It's not backed by any... it's backed by propaganda and governments, fear-mongering, or public health departments and all the rest of that stuff. Or the Fed, when Chairman Powell talked about the inflation, that was big news. During his press conference, he was saying that the indicators, say that, and our figures say that. And so we were trying to figure out what indicators he was tracking. And I think that he must have looked at PNC Financial, which is a big bank, puts out what they call their Christmas price index, or CPI, but instead of consumer price index, it's Christmas price index. They've been doing this since 1984, and they have a basket of 12 items, and they track whether the prices rise or fall on these 12 items. And for this year, a partridge in a pear tree cost 6% more than it did last. 2 turtle doves are up 50%. 3 French hens are up 40.5%. 4 calling birds, no increase or decrease, same price. 5 gold rings, price gold, up 8.5%. 6 geese a laying, up 57.1%. So generally speaking, the price of poultry, just way up. 7 swans a swimming, no change. 8 maids a milking and 9 ladies dancing, no change. 10 lords a leaping, up 12.6%. 11 pipers piping and 12 drummers drumming, each up 7.1%. So the blended index, where you figure out the relative costs in between the things, was up 5.4%. And the core index is where you subtract the birds, was up 8.6% for the year. And I think that scared Chairman Powell. And but I was thinking about this, and I think the methodology in the study is flawed. In particular, I have an issue with the 10 lords a leaping. What constitutes a lord? I don't know where you live, but where I live, my county commissioners and my state medical officer are acting like lords, telling me where I can go, when I can go, what I have to wear on my face, and they're real cheap. You can buy a county commissioner for $100, and they have the average cost of a lord in here at $11,260. You can get a congressman for that, right? So I think they've completely overstated the inflation in the lords a leaping, is what I think. The biggest news in terms of sentiment, in my opinion, if you're a banker or a hedge fund manager, is what's happening in Europe, Australia, Canada, China, Japan, Korea. They're going quite crazy, as are we in certain. But in the United States, it's more broken down into states. Germany, Austria, Italy, France, Portugal have gone, vaccine passports. There's huge numbers of people out in the streets every day protesting, not covered. The British government is holding a vote sometime later tonight. Boris Johnson, the Conservative Prime Minister of Britain, is thinking of imposing restrictions that would likely impede Christmas celebrations. He's the equivalent of our Republicans. They call him a Tory, and he doesn't have the votes, right? Over the past bunch of days, I can't remember, 78 of his coalition have come out and said, no, we're not going to do it. So for him to pass that, he and his health officer, they would have to get the votes from what they call their Labor Party, which is, essentially our Democrats. And there's always plenty of people over there willing to vote for draconian restrictions. But if he does that, if he crosses the party line to get their votes to pass this measure, then he loses the support of his own caucus. And under their system, they can replace him as the prime minister. He's not elected like, our president is. If he loses the support of his caucus, if you will, in our language, they can replace him. And, that's how serious it is. They're willing to risk, the change of whole governments. The Germans and the Austrians, just absolutely clear, in typical German and Austrian efficiency, the health minister from Germany was announcing these lockdowns and passports. Digital ID, on your phone is it's the common thread. They could care less about the virus. They want everybody to have a vaccination pass to be able to enter certain locations or go certain places. In other words, to control movement. And that's the central theme running through all this. The German guy, in announcing that that's what they were going to do, somebody asked him at this press conference, well, if you don't want to do that, what are your alternatives? He says, you can stay at home and shelter in place, get vaccinated, or die. And that's a quote. He said that, right? And, raises the question, die from what, right? One of their health security officers coming over and changing your personal pronouns to was and were. It's Australia's worse. A woman gets on a bus in Australia to go to work. Turns out some other guy on the bus, that she had no connection to him, he was just sitting on the bus, tested positive for Delta variant or whatever. They came, got her out of her work, and took her and threw her in a quarantine camp, for 14 days. Didn't let her call her family or anything else for like the first 4 days. So they're doing, they're doing that in Australia. The indigenous population, the Maori, or what they call down there, are claiming that it's directed against them principally, and it probably is. Doesn't make our press. As much as we bitterly complain about the Chinese treatment of the Uyghurs or the Russian treatment of the Chechens or all this, or the, Israeli-Palestine, is a minor thing. Nobody's saying, hey, Australia, stop throwing your people in medical quarantine camps. Canada, the flight restrictions. And so there's protests in all these places. Half the protesters are mad because they keep moving the goalposts. They give you this vaccine passport, and then they change the requirement for what constitutes fully vaccinated. And because you haven't had your booster, you're not fully vaccinated. And without telling you, you go somewhere and they say, sorry, pal. Or you show up in somebody else's country and then insist that you. So there's a lot of protests about that. And then there's also, the fundamental protests, which, stronger here in the United States, but principally in England. Almost non-existent in Germany and Austria. It's really weird. If they had a well-functioning database, I don't think they would care. But in this country and in England, even the leader of the Labor Party says that it's ridiculous, because if you have a vaccine passport or a digital passport on your phone, whoever controls the database is got too much power. You could go to a store that sells luxury items, maybe to buy your, a gift for somebody for Christmas, and try and go in the store. And they could say, no, you can't go in there, and, no explanation. And then the guy wouldn't let you in because your vaccine passport says you can't come in. And then you go and find out, you go and ask, hey, why wouldn't you let me in? And they say, because you have parking tickets outstanding. We don't think you should be shopping for luxury items without paying your parking tickets, for example. And but anyway, there's huge protests in all these places, not covered. The English have a vote this evening. Don't know how they're going to vote. Just looking at mindset of the people over there as much as I can. I don't know that much about them. But in England, in Gloucestershire, which is a region that voted for Prime Minister Johnson, the guy that currently Prime Minister, they voted for him 365 to 203 in the last election. Patient arrived at a hospital with a 2¼ inch by 7 inch armor-piercing anti-tank projectile stuck up his butt. The doctor, so they were interviewing the doctor how this happened. He said the guy said that he has this collection of these things, and he put this on the floor, and he slipped and fell on it, and it went up his arse, to quote the doctor. He was in considerable amount of pain, said the doctor. So the reporters asked the hospital for a comment. And the hospital spokesman said, the range of objects that are pushed into rectums is incredible. Wine glasses, ketchup bottles, parts of hoovers, vacuum cleaners. Sadly, it's an everyday occurrence. But I have never heard of the bomb squad being called out before, was the hospital's quote. And then in the midst of all this confusion, there's the normal people that are trying to talk the market down. They do this all the time. They have, since the Fed is moving the market up in a channel 30% a year, which is mind-boggling, increasing, inflating the cost of assets by a full third in a year. They haven't had much success, but they keep saying that this is going to break, this is going to break. And a guy by the name of Hugh Smith, he runs a blog called Two Minds Blog, actually came out with an article that had some weight to it. He said that if you just look historically, 87 and 2074 and so on, when the market went bidless, that it had certain things in common. And he created a list. Number one, retail investors are fully invested. All right, they did that by destroying the bond market, so check. Insiders are selling. If insiders means corporate executives, check. Market leadership shrank from 50 companies to 5. In other words, what moves the indices is the top 5 companies instead of a broader range. I've been documenting that every week here. Check. Short sellers give up, don't even try anymore. That's a check. Been a lot of fund closures and stuff. There's a euphoria for buying dips. In other words, if the market falls at all, buy it. It'll be right back. Check. And then he puts reliance on Fed action. That hasn't been a historical criteria. If we had a bond market, and we don't, okay, bond prices are 1.5% a year, 2% a year, so we don't have a bond market. But if we had a bond market, I would tell you, that the things, is in danger of falling below 4,000 anyway, 3,600, somewhere in there. But that's not the situation. In particular, the reliance on the Fed action, the belief that the Fed has to support this market. It's the only part of the economy that's working. Industrial production isn't up. Wages aren't running through the roof. There is indication of a lot of people removing themselves from the labor force and stuff. But with the inflation, your buying power isn't there. The cost of shelter, if you take an accurate measure for the cost of shelter, instead of 6.8% a year, it's like 11.5%. But and what's their fix? They're going to change the way they calculate the numbers here by next September. So I would say, but if you count as insiders as individuals, yes, they're selling. Elon Musk most famously sold some number of $1 billion worth of stock, 10, I think. But another new development that never used to be the case, the corporations repurchase huge amounts of their own stock, right? And that seems normal to us, but 10 years ago, that was unheard of. The only company that was doing it at that time was General Electric, because they didn't have anything else going on. And look at where they are now. It used to be the largest industrial company in the world. Now they're nothing, below the value of Expedia, or some, little internet concern like that. And they used to be General Electric, right? So it used to be confined to really desperate old companies like that, but now everybody's doing it. And if you count the amount of corporate repurchases, then insiders, including the corporations, are actually buying, not selling. So he's wrong there, but he's trying to talk the market down. And then, like I say, he says reliance on Fed action, that's a totally new phenomenon. If you were trying to tie the stock market to any measure of valuation, any measure of social health, societal health, I should say, economic activity generally, new technologies that promise to create new industries like we had back in the 80s with computers. This market isn't worth 3,000 points, let alone 5,000. So the only thing that's working is this asset inflation. They have to keep doing it. I think they will. Next year's an election year, so the pressure is going to be on them to keep doing it after that. You're looking at, in my view, somewhere in between, could be as high as 4,900 by the end of the year, barring something happening. We'll see what happens on that British vote this evening, but stuff like that could get you. It's a tenuous situation. Back to his list here, what did he call it? Market leadership shrinks. Boy, did it, right? This is for last week, just the week ended last week. Market was up 107. The market is measured by the S&P, was up 173.59 points, which is 3.82% in a week. And on $100,000, that should have returned you $3,825. Okay, we have our portfolios. The first two are the top 30 stocks. One we cap weighted, one we equal weighted, right? Okay. They're up huge. The top 30 cap weight, instead of gaining $3,800, gained $5,000, $4,998. But, $5,000, 5% a week, on the entire portfolio, if you made your portfolio of the top 30 stocks and cap weighted them towards the largest stocks, 5% a week. Equal weighted, they were up 3,200. And then this is the most interesting thing. When you just take the top 30 stocks, you wind up with too many stocks in what they call communication services sector and internet technology sector. So we created another portfolio where we looked at the S&P, and there's 11 sectors in the S&P, and we just went into each sector and picked the top 3 stocks by market capitalization out of each sector. So 11 sectors, 3 stocks per sector, 33 stocks, right? Last week, that portfolio, all 33 stocks went up. Every single one. Instead of returning $3,825, it returned $4,010. And these are just the largest, stocks by sector. In terms of your sectors, the biggest thing was communication services, Apple, people like that. Then consumer discretionary, up 17.84%. All right, your largest consumer discretionary stocks, 20% in a week. Yeah, energy, we're up 12.78, or 3.48 for the week. It's just, the volatility and the sentiment is outrageous. Of the top 33 stocks, 3 in every sector, Apple, Visa, MasterCard, United Health, were all up more than 5%. Look at this. Apple rose 10.88% in a week, right? Apple is the largest corporation in the world. Market capitalization of about, it goes up and down, obviously, but it fluctuates around $2.5 trillion. So to rise that almost 11%, you're talking $270 billion in added value in a week. $270 billion is more than the entire capitalization of most companies. I think it's more than the capitalization of ExxonMobil, or close to the capitalization of ExxonMobil dwarfs people like, Disney, and Disney has 500,000 employees, for example. But anyway, you have stocks, doing that. Tumultuous. If we look at the 54 stocks that are all our portfolios, or just for the record here, what happened of our four portfolios? Top 30 cap weight went up $5,000 instead of the $3,825. Top 30 equal weight went up $3,216. 3.22%, and the other one was 5% rise in a week, right? Top 3 average sector went up a flat 4% for the week, $4,007. My portfolio, I'm down to 9 stocks, and I lose one this Friday. Call option, I'm going to let them take it away from me, so I'll be down to 8 stocks. But even I, only holding 8 stocks, made $711, and then with my hedges, the hedges subtracted $700, so I made $11 net. But I mean, everything was up. If we look at the 54 stocks, what am I doing? 32 minutes. We're pretty good. There were 5 stocks that went up more than 7% last week. Now, like I said, Broadcom beat Apple. Broadcom went up 13.2%, last week. Apple went up 10.9%. Visa went up 8.7% on what? MasterCard went up 8.6%. Just basic sentiment. That it's Christmas time and people are going to use their credit cards a lot, and there's going to be increased clearing fees. But anyway, Facebook went up 7.5%. And then there were 3 stocks that were up more than 6%, but less than 7%. United Health, Adobe, and Microsoft, the second largest company in the world, gaining 6% in a week. In market capitalization. Huge. All right. And, that's what's driving, when you drive the 2 biggest companies with that big of gains, that's your index levels rise. But if you're somebody that has smaller stocks, you don't keep pace, right? It's all the largest stocks right now. You have 4 companies that rose more than 5%, but less than 6%. More than 5% in a week, right? Okay, Costco, Cisco, Coca-Cola, and Lowe's, all up more than 5%, but less than 6%. Another 5 stocks that went up more than 4%, but less than 5%. The only recognizable names in there, Disney, Google, and UPS. Then you had 12 stocks, a full dozen. This is only out of 54 stocks. A full dozen that went up more than 3%, but less than 4%. Recognizable names in there: Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, ExxonMobil, Chevron, ConocoPhillips, Boeing Aircraft, and Honeywell. And then 8 stocks that went up more than 2%, but less than 3%. Intel, 3M Company, Walmart, PayPal. And that's it. 7 stocks that went up more than 1%, but less than 2%. Recognizable names in there: Home Depot, Amazon, Netflix, Bank of America, Sherwin-Williams. And then 3 stocks that went up, but less than 1%. JP Morgan, Philip Morris, and Tesla. Tesla was the lowest performing stock out of our 54, which are the large stocks, for the week at 0.2. But Elon Musk announced that he's going to sell another, I can't remember, some enormous amount of stock. Nike went down 0.7%. NVIDIA went down 1.6%. And NVIDIA, I think, is the biggest stock there is. It's up 109% since April. From April 12th to now, it's up 109%. But anyway, so that one fell a little bit. Verizon Communications up 2.4, AT&T up 2.7, Pfizer up 2.8, Target up 3.8, and Comcast, or down 3.8. All those were down, excuse me. And Comcast down 6.4%. So Pfizer fell 2.8%. Omicron, prior to last Friday, killed more people, Alec Baldwin or Omicron. The answer was Alec Baldwin. The Brits, Prime Minister Johnson, with his big vote coming up, identified the first person that died of Omicron in Britain. They refused to release his name and his details, and everybody's saying that that's because that you're just doing this for propaganda purposes for your vote, and that he was, 95 years old with 10 comorbidities, but he happened to test positive, so you threw him in there, is the allegation. Nobody knows the truth because the government won't release any of the details before the vote. Pfizer, interesting. I'm not going to speculate on why, but they purchased another small company, was announced this morning. Over the past week, they purchased 3 others. So that's 4, relatively small. Pfizer is about your largest medical concern. All of them, all 4 acquisitions, concentrate on autoimmune disorders, drugs and drug candidates for autoimmune disorders, where your body starts to eat itself, in other words. So Pfizer thinks that's going to be a growth business for some reason. So they bought 4 of these companies. It's the only part of this asset inflation is it's causing problems. They don't have anything else to do. It's the end of the year. All your large funds, all your asset managers, all your retirement systems, everybody has an interest in seeing the markets close up because it makes their books look better, and then they can go if they're a public retirement system, they can go to the legislators or the public and say what great shape they're in. If you're a fund manager, you get to charge more and say, look at what we did for you. So everybody has an interest in pushing this thing up in between now and the end of the year, unless the political situation in Europe or something like that, or that volcano, just something. Unless there's some big event, that's what it's going to do, in my opinion. They'll push it up, and then, like I say, next year's the election, so who knows. But from now to the end of the year, I see it melting up or floating up. No particular news, no economic activity, but we'll see. Like I said, it's real vulnerable. By any objective measure, it should be down 30% below where it is. We're not doing objective any measures anymore. That was so last century, right? We don't do that anymore. We do sentiment. And unless something changes the sentiment, I think it goes in between here and 4,800 by the end of the year, but we'll see. And that's it. 40 minutes. This has been the Bogdanich Perspective. December 14th, Tuesday, always Tuesday. Questions or comments, send them to paul@stockbetor.com. That's paul@stockbetor.com, BETTOR.com. And do widzenia. That means goodbye. We're at 43.48. And they opened the day at 44.07, so they're down about 60 points. The 100 DMA, where the Fed